friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a new episode of Markets Tomorrow, the daily market technical analysis show, where we look at what happened in the market during previous day, that's today basically, and then how we can plan for a better trade for the next day. Remember, this is analysis for February 10th, Thursday, and expiry day tomorrow. Also happened to be an RBI policy day, right, 2022. And what happened in the market? The bulls hit back after a high volatile previous day, right? Yesterday was heavily volatile, right? It was a W kind of pattern, but today, it's all geared up, and the bulls are back with price moving above the 20 DMA in the bank Nifty and 50 DMA in Nifty, right? So without wasting time, let's analyze and see what exactly happened today, right? So as usual, the pre-market analysis, right, for Feb 10th would be based on all of these parameters that you see on the left side on the charts we would be looking at. We would have an additional data analysis on all of these parameters that you see on the right side. We'll also have some actionables, right? And so here is a price pattern. See what do you see here? It is clearly a gap up. A gap up. It's kind of a bullish kicker pattern, you can say. Runaway gap, whatever you call it. Here also you have a gap up. Gap up indicates the strength of the bullish. Whenever there is a gap up, right? Look at this gap up, right? The way this the bulls so people are so excited to go long on the market is what it indicates. So and Nifty also, so the candle size, if you see, it's wide range. It's wide range clear bullish candle is what you see. And previous day we had it's kind of a small body doji, almost like a hammer also. So whichever is the way, the size of the wick indicates the presence of the bulls here clearly. Similarly in the bank Nifty also, it is a hammer clearly, and the size of this wick means the pressure from the bulls is what exactly it indicates. That obviously has gapped up also today, means the bears are dead, at least for very short term, we can say, right? So it is also see change in polarity bounce potential. We saw that, we talked about it yesterday, and it worked out. We hope that this previous resistance acting as a support and the CIP happening here also. Some few days back, yesterday, day first, all these days we are hoping that the support will act as a CIP bounce. It did not happen. Yesterday also it did not. So today it happened, and the CIP change in polarity worked well on the Nifty and the bank Nifty also. Bank Nifty also, the previous support resistance acted as a support, so that CIP worked out. And intraday, look at, before moving to that, what happened actually, right? So 1.1% moved up Nifty, 197 points up. Change in polarity bounce happened, bullish hammer, and it is closed above the 50 DMA. 50 DMA is very crucial in the short term. Bank Nifty also gapped up. It gained 582 points, 1.5% up, and CIP bounce and a bullish candle, and it closed about 20 DMA. 20 DMA is a median of the Bollinger Bands. It's also crucial. Now, intraday, this is what happened, right? Gap up, and then some consolidation in the afternoon, breaking out. Gap up with a huge candle bullish, and then consolidate in a range, and then trending up. Price. So that's the price action. Bollinger Bands are saying almost the same story. Highly volatile Nifty, right, and mostly sideways, but slight expansion towards the downside also is their bearishness. But bank Nifty, clear small volatile, right, because there is skews of the bands, but clear sideways volatile, non-volatile, and sideways volatile. That's what bank Nifty and Nifty is. And also clear close above the 20-day MA is bullish. So bank Nifty clearly Bollinger Band size, it's bullish, and it's less volatile than the Nifty. Support resistance levels, support 7350, 17350, 7400 is for immediate support. If that is gone, then 7200 to 7300. That's gone, then you have 13,000. If that's gone, then 16800 to 16900, Fibonacci 38, and then that's gone 16700 to 16750. The upside resistance first would be to take out the 17500, 7600, Fibonacci 23 level. Above that 17800 to 17850. Above that is 17950, 18,000 rounding number. So that's the resistance supports on the Nifty. On the bank Nifty on the right side, you can see that the support right now is at 18500 levels, and then the resistance above that would be 38,900, 39,000, that range, and then 39,500 with the next range, and above that you have 40,000. Similarly below, The first support seems to be 38,000 level, and then if that's broken, 38,800, 700 that level, and then if that's broken, 37,400, and that's broken, then 37,000 kind of levels is the supports on the bottom side, right? And also it's in a so there's a trend line support also not here for the Nifty. Yeah, so momentum reverses. If you see, the momentum is clearly sideways on the Nifty, sideways for the Bank Nifty also. Right, this is for the short term daily. In the medium term also, it is sideways for Bank Nifty and Nifty. There was a bearish divergence that took the market down, but seems like the target is far away and it is not going till there and just taking a U-turn from there. So looks like bearish divergence seems to have stopped working now. Trend indicator shows that it is bearish on the Nifty and bearish on the Bank Nifty in the short term, right? And the strength of that bearish is also reducing, falling strength. That's the trend and the momentum, right? Sideways momentum and then bearish trend is what in the short term it is. Volatility today again cooled off around 6% and 18.5 is where it is now settled. Umbrella volatility is 17.44 and IVP is 60, cooled off to 63 levels, right? So it is cooled off from 18 but still at a from 20 below, but still at a higher volatility level. So it could again spike back to that place or it could cool off back to the 15 levels. Either of that could happen, right? Because it's mean reverting. It had spiked up and then cool off is happening. Now you don't know when that cool off is going to stop. Probably it may the target may be the next range. But 18 is still at a high level. There you have to be cautious. About 20 you have to be cautious. That's operators analysis for expiry day. Before the expiry day, the options operator charts is what you see on the buy. Futures operators is showing short covering the Nifty and the Bank Nifty. Short covering is bullish. It means that people who are short are now covering themselves and then going long. So that could be a big up move that can happen tomorrow if nothing goes wrong, right? In the SGX or US markets and all that, right? So short covering is powerful. And that's what the futures operators data is showing. But options operators data is showing that huge addition of red is there. Red is puts. Huge addition of puts are there. That has happened and unwinding of the calls as operator. Whatever green you are seeing downside, it is unwinding. And we can see that the maximum number of put writing is in at 17,400 and maximum call writing is 18,000. Very wide range. So people are expecting that the pulse may take the market even to the 18,000 level. That's right. So it's very bullish and 0.78 bull call ratio is near to bullish as you can say. Right? So the range is 17,400 to 18,000. 600 points range is what people have put, right? But 17,000 also has got equal amount of put rating is there. 17,700 also has got good call rating. Look at the range for Bank Nifty, 38 and 39,000, just 1,000 points, very close range. 37 also has good put rating and 40,000 also has good call rating. So those are the support zones. 38, 39, 600,000 points and then 17,400. So people think that the world, people who are betted for expiry thinks that people in the sense the sellers are thinking that the more maybe a 600 point more that may have most likely. But one thing to remember is 17,400 and 17,000 is almost equal amount of put rating that has happened. So it could be otherwise, you never know. So that is where the puts open interest rate of before 1 day before the expiry is showing, right? So correlate these levels that you see where the highest put and call ratings are there with the chart support and resistance levels, and then you should be taking the a long, short, or whatever you are doing with the positions. Look at the heat map today, right? It's green all over, all heavyweights. HDFC, Nifty, HDFC Bank, Reliance, ICICI, everything performed except ONGC which went down with the crude oil price or something probably. Sectors, all sectors except energy, all sectors are green. Right? So let's have a quick look at the index weight, heavyweight stocks, right? Not much interesting except that all of them have turned green today. Obviously, when the index is green, then all of the heavyweights has to be green, right? So there is a bounce on the trend line support that is happening on HDFC Bank. On the still sideways, and there's a so there seems to be some green up move that has happened on HDFC, but it is momentum for that is bearish, right? And Reliance is also green today. That was green yesterday also, and has gone to the sideways zone now. And Nifty is also moving up. IT overall was moving up. Momentum remains sideways, and ICICI Bank also moved up. Since bank index moved up, banking is bullish, so obviously it moved up, but momentum is still inside of the short term. Kodak Bank also slightly consolidation is happening, sideways momentum, and TCS also moved up slightly, but it's an inside bar, all indicating consolidation, and momentum is sideways. So nothing much interesting except that on the all the indexes have momentum is sideways for all of the heavyweights, but they have made good moves today, right? The green candles, right? HDFC Bank has bounced the support, is optimistic, and ICICI Bank also is a banking index which is within the trend line channel, is giving more bullish signals, right? So that's index sideways. Sectoral performance: IT moved 1.3%, metal moved 1.86%, auto moved 2%, 2.19%, pharma 1%, FMCG closed flat, realty closed 0.6%. So except FMCG, all sectors have performed with more than 1% or near to 1% of up move that has happened, and the momentum is sideways now for all the major sectors now, except metal, which is having a short-term bullish momentum. So you could go for swing trades, since the short-term momentum is bullish, or positional trades for weekly momentum also has to be bullish. Institutional participation is interesting. Very small selling by FI, not very small, but small selling, and the DIs who have turned bearish now have gone to buying mode again. Now the currency, USD, US dollar currency index is consolidating. It is cooled off quite a bit, and USD INR also seems to be kind of consolidating, but there is a strengthening and rupee is weakening. Its momentum is slow, but right. Crude oil is still at very high levels, very close to the 90, but it has cooled off since last 2 days. But momentum is at very dangerous zones. Gold is spiking up, right, trying to break out the channel top of the cup and handle, and let's see if it will succeed this time. Momentum is spiking up, but still not in the bull zones. Global indices, quickly review, seems to be back into greens. In Dow Jones is clear, bounce up is confirmed. It is clear white bull candle that you can see there. All the other indices like Nasdaq also is showing green up yesterday, today also, and S&P 500 also is showing good up move and green candle. So US markets worry may have halted temporarily at least, but you'll have to watch this what happened pre-market tomorrow also. Two actionables: Maruti has auto sectors. Maruti has performed very well as the weekly charts. Great volumes, great momentum, great trend in the short term and the medium term also actually, right? So it's inverted head and shoulder pattern which is broken out from a resistance zone. It can give good trade in the position. It is low, but it's there is a resistance up here 9988. At least till there, it should be fine to go for a positional trade. Second one is Hindalco. Metals is roaringly bullish, and Hindalco is within a trend line channel. Volumes are decreasing a little bit, so I'm a little cautious, but momentum super on the medium and the short term trend is also bullish, right? So Hindalco and Maruti. Now this is the same Nifty and the Nifty screens with the moving averages, right? Today you can see that it has closed above the 50 DMA but below the 20 DMA Nifty, right? So it need to close above the 20 DMA before we can say that any the resistances are taken out or not. Momentum is still the sideways. BANKNIFTY clearly are seeing the wide range bullish candle and closed above the DMA, and is less volatile, more volatile, right? That's Nifty and BANKNIFTY. Just before the wrap up, we were re-looking at these charts once again in a different chart, right? So overall the view for the short term is mild bullishness. Why? Because the chart patterns is saying that, support resistance are the price action is saying that, and the trend momentum also at the side zones from the bearishness now it has turned kind of sideways on almost all the sectors, and heavyweights and everything has moved to a sideways trend rather than bearish zones. So after a heavy volatile day of FIDA is also selling, it was there was a big worry of bearishness that was all over, even when the bank nifty also gave up yesterday. But today, that's a different story. It was a gap up that happened with the US market also seems to be green, and then there is no issue. So it clearly shows that the buyers are there out there, right? Yesterday's wick yesterday afternoon buying, the wick size itself indicates that presence of bulls. Already cooled off to 18.5 is another good thing. Anything below 20 is good. Anything above 20 is time for caution. And FI is continuing to sell is again a worry. So, right, the positive factor is that Bank Nifty is still showing great strength. Right, Nifty also showing strength. Like closing above 50 down, DMA is good. Closing above 20 in Nifty also, in Bank Nifty also is a good thing. So tomorrow is RBI policy. Yesterday, I mistakenly said that it is today, but actually it has been postponed due to some holiday. So RBI event is monetary policy. People are expecting there is interest rate hike, so markets could be heavy volatile, and also it coincides with the expiry day weekly. Right? So there can be heavy volatility. So always position side keep it on until direction is very clear in the afternoon or something. Right. So options setups always use vertical calendar spreads if you are carrying forward the positions, and if you are intraday, have tight stop losses with a range, right? So that is all I have. My views, my bullish for tomorrow, short term. I hope it helps you to frame your own market view and your own trade plan. So if it helps you in some way, consider hitting the like button and sharing to maximum. We have very few subscriptions, so appreciate your help and motivation in this way. Thanks. Happy trading, happy investing. Bye.